DuPont innovation lowers LCOE by increasing cell efficiencies and system lifetime while reducing total system cost. Materials matter.
Hello and welcome to this week's PV-Tech Newscast. Coming up, PV installs reached 32 gigawatt in 2012 and 35 gigawatt is forecast for 2013. We reveal the top 10 PV markets in 2012 and the top 10 PV module suppliers. Plus, stronger than expected PV demand in first quarter. PV installations hit 32 gigawatt in 2012, up from 28 gigawatt in 2011, according to market research firm IHS Global. Growth is also expected in 2013, but restricted to only a 3 gigawatt increase to 35 gigawatt. Falling average sale prices over the last 2 years are set to continue and have a significant impact on industry revenue, which is expected to decline to an estimated $75 billion in 2013, down from $77 billion last year. IHS reported revenue would expand in the double-digit range from 2014, reaching as much as $115 billion by 2016. A major regional shift in PV demand is occurring, and the industry is becoming truly global. In 2010, Europe accounted for more than 80% of solar demand, declining to 53% in 2012, and is forecast to slide further this year to only 39% of the global market. Not surprisingly, Asia, and in particular China, is on track to replace Europe as the world's largest source of solar installations in the coming years. The top 10 PV markets accounted for 86% of global demand last year, down slightly when compared to the 89% share achieved in 2011. That's according to NPD Solarbuzz in their forthcoming Market Buzz report. Germany was once again the largest single country market in the world, growing slightly year on year in volume terms, but falling 2 percentage points in global demand share. China showed tremendous growth in 2012, increasing its market size by more than 70% year on year to become the second largest market in the world for PV and displacing Italy, whose market declined by 50%. North America more than doubled year on year, moving up the top 10 list by 2 places and displacing France and Italy in the process. Markets outside of the top 10 continue to account for a minimal portion of total global demand, but showed strong growth, increasing their share by 3 percentage points year on year and growing more than 40% on a volume basis. Current projections show this trend continuing, and with growth in emerging countries, especially in Asia, set to increase another 3 percentage points from current demand share figures. Yingli Green Energy has been confirmed as the #1 PV module supplier during 2012 by NPD Solarbuzz. 7 of the top 10 companies are publicly listed, vertically integrated seaside manufacturers located in China. First Solar, Sharp and SunPower are the only non-Chinese-based suppliers in the rankings for 2012. First Solar and Jinko Solar, ranking number 2 and number 7 respectively, both improved their ranking position last year. The success of First Solar is highly significant, not only as the only thin film maker in the top 10 list, but also due to its business model and the shift from supplying modules to external customers to using them predominantly on internal projects. Jinko Solar also developed projects in China, and Jinko was one of the main beneficiaries from the strong domestic market demand during the second half of 2012 in China. Total module shipment from the top 10 companies was equivalent to less than 50% of global module demand last year, suggesting that further consolidation or the shakeout of global PV module suppliers has some way to go and is likely to continue for the next few years. Expected cuts to the feed-in tariff in Japan and import duties imposed in the EU are generating a higher than anticipated pull-in of factory module orders, according to EnergyTrend, a market research division of TrendForce. The Japanese market has built momentum since a new feed-in tariff was introduced in April 2012. The expected revisions to the FIT have generated a rush to complete projects before the changes. The increasing belief that the EU will impose anti-dumping duties on Chinese-made modules, coupled with the possibility of retroactive action, has also generated increased factory order rates in January in an effort to beat duties. And finally, with subsidies starting to wither away and module prices falling, opportunities for solar energy storage systems appear to be growing. Solar Storage 2013, published this month by market intelligence company Nanomarkets, forecasts the global solar energy storage systems market will be worth $2 billion by 2018. According to Nanomarkets, the falling costs of PV modules and declining subsidies, most notably the reduction of feed-in tariffs, are playing a key role in driving growth in the solar energy storage market. As subsidies are reduced, self-consumption of solar power becomes more valuable than exporting. Therefore, storing becomes a much more attractive option. Germany recently announced the formation of a new German Energy Storage Association and in the next few weeks is set to launch a new federal incentive scheme for energy storage systems. Well, that's all we've got time for this week. Thanks for watching and see you again soon.